Commercial and residential real estate doesn't just look different, they sell differently too. If you're a fiduciary or attorney, helping manage a trust or estate that includes both types of property, this is one area where using the wrong approach can cost the estate hundreds of thousands of dollars. In this video, I'll walk you through the key differences in how residential and commercial real properties are valued, marketed, and sold, and why working with an experienced probate and trust broker with both commercial and residential experience who understands the buyer's psychology in each market is critical to protecting the estate's value. Hi, if we haven't met, I'm Andrew DeVries. I help professional and family fiduciaries sell probate and trust real estate in the San Francisco Bay Area with less stress, less liability, and for more money. I've closed over 900 of these transactions over the past 20 plus years in the Bay Area, and with this channel, I'm here to help you avoid costly mistakes. If you're a family or professional fiduciary or attorney managing an estate or trust with multiple real estate assets, chances are you're dealing with more than just a single family home. Maybe there's an apartment building, an office building, a retail storefront, or even just a commercial condo or a small duplex. At first glance, it might seem like these properties can all be handled the same way. Get an agent, get it listed, and sell it. But that quick assumption can lead to real problems. Because residential and commercial properties are not valued or marketed in the same way. Each is governed by a completely different buyer mindset, pricing structure, and risk profile. And if you don't approach each asset on its own terms, the estate could end up leaving serious money on the table or the property sitting on the market far longer than necessary. For fiduciaries, that's more than just a financial inconvenience, it could be a liability. Many fiduciaries and attorneys feel more comfortable with residential real estate as that's what most of us deal with in our own living situations on a daily basis. So let's start there. Residential properties. Whether it's a single family house or a condo, they're typically valued based on comparable sales, often called comps. Basically, we look at what similar residential properties nearby have sold for, make some adjustments for exact location, amenity, and condition, and then we use those comps with adjustments to set baseline pricing. Therefore, residential real estate takes this market comparable value approach, but there's one big twist. In residential real estate, emotion also plays a huge role in the buyer psychology. Unlike commercial buyers, residential buyers are usually purchasing a place to live in, not to invest in. And that means their decision isn't purely rational, it's also emotional. They fall in love with the light in the living room. They picture their kids growing up there. They see a yard and think about their dog. And in a market like the Bay Area, which has historically had tight inventory with more buyers than sellers, a fear of missing out or scarcity thinking can also take over in buyers' minds. That emotional connection can, and often does, translate into how they write their offers. In a competitive market like the Bay Area, we've seen buyers stretch well above the asking price simply because a home felt like the right one to them. That's why presentation matters. Staging, photography, landscaping, marketing efforts, these aren't just cosmetic choices, they're strategic ones. They influence perception, which influences price. And from a fiduciary standpoint, that matters. Because your job isn't just to get it sold, it's to maximize value for the estate or trust. And in residential real estate, that means understanding how emotion and perception drive demand and using that to the estate's advantage. This approach, however, doesn't often carry over in the same way to commercial property. In that world, the buyer isn't picturing Sunday dinners, they're reviewing spreadsheets. Unlike residential property, commercial real estate isn't bought based on emotional appeal or comparable sales down the street. It's evaluated more like a business because this is in essence what the buyer is purchasing. Buyers of commercial property, usually investors or investment groups, want to know the following things above all else. How much income will this property generate now and in the future? How reliable is that income stream now and in the future? What will my expenses and possible capital expenditures to manage and maintain the property be now and in the future? That's where capitalization rates or cap rates, among other things, come in. A cap rate is a simple formula investors use to determine the return they'll get on a commercial property based on its net operating income. The higher the cap rate, the greater the expected return. But cap rate is just the beginning. Buyers also want to look closely at rent rolls. Who are the tenants? How long are the leases? Are they paying market rent? And what are the rent control laws on rent increase and eviction processes in the area where the property is located? They also want to look at financial statements. What do the last 3 years of profit and loss statements on the building show? What are the major expenses? Are they stable or fluctuating? And where is income increasing or decreasing now, and how can that be improved in the future? They also want to look at lease terms, which are different for apartment buildings or commercial properties like offices or retail. For multi-unit residential properties such as apartments, they want to look at who pays the utilities, such as water, garbage, and gas and electric. For commercial properties, they want to look at the lease terms as well. Is it a triple net lease, meaning tenants pay base rent plus nearly all property expenses, including taxes, insurance, and maintenance? Or are they gross leases, where there's a flat rent amount and the landlord covers nearly all operating expenses? Or is it a gross modified lease where the tenant pays base rent plus some but not all operating expenses? They also want to look at the vacancy risk. How hard will it be to fill the space if someone leaves? They also want to look at the market fundamentals. Is this a growing area with strong tenant demand or a declining one? Every commercial property tells a financial story, and that's what drives value. The building itself might be beautiful, but if the income isn't there or the buyer leases are weak, buyers will price it accordingly. This is why commercial listings often take longer to sell, and why accurate, professionally prepared financial documentation is absolutely critical. And for fiduciaries, this means you can't simply price a commercial property based on what the building should be worth. You need to understand or partner with someone who understands how investors think and how these deals get underwritten. Otherwise, you risk overpricing, long days on market, and ultimately leaving money behind. To really understand how different these markets can be, let's look at a few real-world examples right here in the San Francisco Bay Area. Take office space in San Francisco. Before the COVID pandemic, Class B and Class C office buildings in downtown neighborhoods were trading at strong prices, driven by tech growth, limited inventory, and high occupancy. But now, we're seeing these same buildings selling for 50% less than their pre-COVID valuations. Why? Because work from home trends, tech layoffs, and changing corporate needs have fundamentally altered demands for traditional office space. Also, vacancy rates are up and leasing is slower, and the potential income, what drives the value in commercial real estate, has dropped dramatically. Now contrast that with multi-unit apartment buildings and some retail spaces in strong submarkets, like a corner building in a walkable high-end neighborhood like Pacific Heights in San Francisco, Rockridge in Oakland, downtown Walnut Creek, or parts of Silicon Valley on the peninsula. If it's well leased and occupied by professional work-from-home tenants with stable incomes and/or local service businesses, think a bakery, salon, or boutique fitness center, those properties are likely performing better than ever, and therefore their values are stable or may even be increasing. So what's the takeaway? You can't assume that all commercial property has taken a hit or that all residential property is booming. Each sector has its own fundamentals, and value is driven by what's happening within that specific market segment. As a fiduciary, pricing and marketing strategies must reflect these sector-specific dynamics. If you price an office building like it's 2019, or assume a struggling retail center will sell like it's a neighboring home, you'll likely miss the mark. And missing the mark doesn't just mean a slower sale, it can mean a direct loss to the estate and potential liabilities if beneficiaries question the process later. So why does this all matter, especially to fiduciaries? Because you're not just selling a property, you're making decisions that affect the financial outcome of the estate, and in many cases, the lives of the beneficiaries or heirs. And if you treat a commercial property like a residential one, or vice versa, you risk mispricing it, attracting the wrong kind of buyer, or sitting on the market while the value quietly erodes. When that happens, beneficiaries start asking questions. The good news is, fiduciaries and attorneys don't have to be real estate experts, but they should work with someone who is. And that's where I come in. I specialize in helping fiduciaries sell both residential and commercial real estate strategically, efficiently, for top dollar, and with your legal obligations front and center. In summary, if you've just been appointed as a trustee or administrator with commercial or multi-unit apartments, you don't have to go it alone. Call me today for a free consultation of your estate and trust real estate portfolio and what the best course of action may be given the needs of your unique situation. And for more information on our services and recent sales, please feel free to visit probateagent.com and subscribe to this channel.